Okay, thanks so much for joining us for this short video explanation of the concepts of international tax and, more importantly, how they apply to you as a freelance musician. So, this video is a condensed version of an online sort of shared live webinar that we ran a couple of months ago. And we are trying to pick up the key topics that arose during the course of that live webinar and make sure that we address some of these issues that are really common for all freelance musicians. So without further ado, we're going to try and keep it snappy. Let's move along to talk about what we're going to review. So we're going to talk very briefly about the concept of double tax, just so you understand what it's all about. Then the ways in which it actually affects you as a freelance musician. So how your overseas promoters are likely to deduct tax from the jobs that you do abroad. We're going to talk about how you can take a bit of a credit for that withholding tax that was deducted from your overseas job. What can you do about that? And how do you deal with that on your individual self-assessment tax return that you're filing in the UK? Bit depressingly, we're also going to talk about the stuff that you cannot take a credit for. So sometimes there is a sense that some of that withholding tax that was deducted abroad is just lost. And we'll cover briefly what those scenarios are, and more importantly, what your options are when that is the case, so that you can just make the best decisions for yourself and your business about how to deal with the various situations that arise when you're working overseas and you're being charged withholding tax by that local promoter. So before I go on and start to do more in-depth look at these various concepts, I will just say briefly that the assumption for the purposes of this video is that you are a freelance musician. So in other words, you're trading as a sole trader, that you're UK resident, and that you are working as an individual for that promoter overseas, or maybe you might be working as a partnership, in conjunction with other band members, for example. But more importantly, what we're not covering is how it affects you if, for example, you're working through a company, or you might be dual residents. All of these things are very common for musicians. So we are looking at a sort of a particular most common scenario here, but obviously it's not going to cover every scenario for everybody. So just be aware of that. Okay, so double tax relief, what is the concept all about? It stems from the fact that as a UK resident, you are obliged to report and pay income tax on your worldwide earnings. Gains also, but for today we're talking about your overseas earnings, your fee income from gigs abroad, essentially. And that is the case irrespective of where that income arises. So it doesn't matter what country you've done the job in. It doesn't matter even that that country may have withheld double tax from you at the time that you did the job. What's important to be aware of is that as a UK resident, you are required to report that income on your UK self-assessment tax return. And therefore, obviously, you're going to be taxed on it here in the UK. So the concept of double tax relief, which is point 2, is this idea that there should be a mechanism to make sure that you don't get taxed twice on the same bit of income. And that's really what double tax and double tax relief is all about. So looking at point 3, we need to acknowledge that in order to make this work, there are double tax treaties between the UK and multiple countries worldwide. And we're always going to refer back to that agreement with whatever the local country is to make decisions about how that double tax should be treated. There are provisions in place if there is no double tax treaty with the country that you've just done the job in. In that scenario, you're looking at something called unilateral relief. It works, to be honest, in a very similar way to foreign tax credit relief, which is the more common one, let's say, because that's the one that applies when there is a double tax agreement with the other country. And number 4, like I said, just briefly, we're assuming you're self-employed, we're assuming you're UK resident. This would all work if you're also a member of a partnership, but complexities beyond that, not really applicable as far as today's short video goes. Okay. So as we said, foreign tax credit relief is the specific title of the relief that you can get to recognize the fact that you've been charged tax already abroad, and now you're expected to declare this same source of income and pay tax on it in the UK as well. And that's because you're including it on your UK self-assessment return. So that's where it's being pulled into UK tax. And generally speaking, again, there's always the kind of caveat to everything that for every rule there's an exception. So you need to be aware of that. But usually there is a provision to claim some relief for the fact that you've paid that tax abroad. It might even be the case that using certain forms that you can apply for before doing the job or before receiving the payment for that job abroad, you can reduce the amount of foreign withholding tax. You may even be able to be put into a position where you're exempted from foreign tax entirely. We'll talk very briefly about how to do that as well. That will often be linked to an application for a certificate of residence, which you would then provide to your overseas promoter. But we've provided a separate video on how to apply for the certificate of residence and what the scenarios are when you need to do that. So just have a look for that if you're in that kind of situation. The way foreign tax credit relief actually works is that it's a bit like a payment on account against your UK tax bill. It works by reducing the amount of UK tax that you have to actually physically pay over, because it recognizes that you've paid some tax in Germany or France or Spain or wherever it might be. And as I said, always with a caveat. Okay, so withholding taxes for entertainers, which is generally speaking what you UK-based freelance musicians are going to be classed as I said, works a little bit like a payment on account, and assuming certain things which we'll go into more detail on, it'll basically reduce the actual sort of cash payment of income tax you have to pay over in January and July each year as part of your annual self-assessment tax return bill. The rates and the rules about each country vary from country to country. So that's very much harking back to my comment about the fact that there is a double tax treaty between the UK and each other country, and you do need to look at that. And also, obviously, every country has its own specific withholding tax rate and its own way that they levy withholding tax on entertainers. So just as a kind of heads up, I've given you a couple of examples here on that middle block in this slide here, saying, so for example, what we really commonly see is that in France, the withholding tax that you're going to have charged on your fee income is going to be 15%, but on only 90% of the gross fee itself. So it's 15%, not of the entirety of your fee, but usually on 90% of your fee. And it's really important to be aware of that, so that when you are making your application for foreign tax credit relief, that you're matching numbers correctly and that you're documenting things accurately. We'll come back to how do you do that in more detail as we go along through some of the later slides. Germany, those of you who've already worked in Germany will have spotted that there's always this little funny solidarity tax that's charged on the tax itself. So that can make it a slightly funny rate of withholding tax. It's 15% on the fee, but then it's 5.5% on the tax itself. It actually, for those sort of dorky tax nerds like me who like to know, it works out at 15.825% of your fee. Spain, commonly 24%. But all of these things will change from year to year, from country to country, because they're local rules, and obviously they can change them when they want to. Withholding tax, the other thing to be aware of, to point out for musicians in particular who get paid per diems, for example, quite often, is that it varies from promoter to promoter and from country to country as to whether the withholding tax will be charged on the entire fee, including per diems and travel payments and early start, late payments, all of that, or porterage, all of those kind of extra bits that can get added into your pure performance fee. Sometimes withholding tax is charged across the lot, but sometimes it's not. And this is where you really need a pay statement from your promoter at the very least, so that you can make sure that what you're then claiming on your UK return is accurate. Watch out for social security deductions. So that is the local country's equivalent of national insurance. Again, separate video on that one. I'd really recommend you have a quick look at it, and it talks about how that works, what you can do to minimize the amount of local social security you pay. But most importantly, what you need to know as far as your UK tax return and claiming foreign tax credit relief is concerned is that you need to be aware of the fact that any social security deductions that were made at source by your local promoter are not relevant when you're claiming foreign tax credit relief on your UK tax return. So you can't include that amount of deduction when you're claiming for this sort of notional payment on account type figure. Okay. So how do you make sure that what you're putting on your UK tax return is going to be accurate? That's what this slide is really all about. Make sure that you have clear documents, either set up as part of the original contract negotiation or a pay statement from your provider, from your promoter when you do the job, that shows these kinds of details. It should show the gross fee in the local currency. It should show you what the withholding tax amount was. It should be clear about which bits of your fee were subject to withholding tax. So in other words, did they tax per diems or did they not? Did they tax the early start payment or did they not? All of those kind of things. And as I say, just watch out, because there's no hard and fast rule I can give you about that, I'm afraid. Usually what you really want is an official country withholding tax certificate as well. And as much as you can, push that promoter to forward that on to you when it comes to them. It will come to them in the first instance and they will send it on to you. So push for that if you can. But truthfully, that's not always provided. And you should be fine as long as there is a clear pay statement given to you instead. And as long as the withholding tax amount itself makes sense and it's consistent with the double tax treaty between the UK and whatever country you're working in. So, for example, withholding tax that was suddenly deducted at 60% in the local country of Germany, for example, doesn't comply with the double tax agreement that we have with Germany. So in that instance, you absolutely need to see the pay statement to see what's going on, and you're unlikely to be given any credit for what the appropriate rate is according to the double tax treaty. So much more likely to be limited to credit that matches the tax treaty, which is the 15%, for example, that we referenced earlier. But hopefully there's not too many gigs you're doing abroad where you're suddenly losing 60% to local withholding tax. That's pretty dire. Okay, agent statements. Here's a little kind of watch out, heads up comment. Quite often what we see as tax advisors is that the payment recognizes that there will be, let's say, a 15% payment made to your business manager or your agent who arranged the contract in the first instance. We really commonly see this payment coming off before the withholding tax is charged. So just keep an eye out for that. It's really sensible to try and cross-reference your agent statements with your local promoter pay statement and just make sure that everything tallies up. Okay, so we've been talking about credit relief. I've been calling it the foreign tax credit relief, which is the most, as I said at the beginning, it's the most common mechanism to get relief for the foreign tax that you've paid at source abroad. And as I said, there is also unilateral relief, which works in a very similar way, but applies when that country that you've just worked in doesn't have a reciprocal double tax agreement with the UK. But there is another mechanism for relief as well, which I just want to point out to you, and that is deduction relief. And the way that works is essentially the tax that was deducted at source on your job abroad almost acts like an expense. You just recognize that it was lopped off your gross fee, and then when you're declaring your income in the UK, you declare the net payment after that withholding tax deduction. So you're getting relief because it becomes almost akin to a tax expense against the fee. And then as far as your UK income is concerned, you're declaring the residue of what was left after that withholding tax was deducted at source by the promoter abroad. So that's how deduction relief works. No hard and fast rules on this one either, I'm afraid, but I would say more commonly, it's the credit relief that will do a better job for you in terms of minimizing the overall amount of tax you have to pay. But if you're a particularly lower earner, you're at the very early stages of your career and you don't have a lot of UK taxable income, it may well be that deduction relief actually works better for you because there's just not enough credit to really use your credit relief. Now, that's made everything sound quite complicated, and I will talk about it in a bit more detail on a later slide, but it's really just for now to make you aware of that fact. Okay, moving on. So, as we said, foreign tax credit relief or unilateral relief, we're going to talk about those for a minute here. First thing is that you can only get relief up to the equivalent of what you would have paid in UK tax on the same source of income. In other words, whatever the rate of UK tax is. The credit you can get is going to be the lower of what you actually had deducted at source or what your equivalent UK tax liability is on that same source of income. And you'll see further down the line why this is quite an important distinction and why it can really make a difference in countries that have quite high withholding tax rates, like the United States, for example. It can't create a loss. I'm looking at the middle column here with this one. So it can't reduce your tax bill and put you into a situation where you can get a refund. It doesn't apply to, as I said, national insurance. So it doesn't apply to class 4 national insurance in particular. And that can be a bit of a sting in the tail because for most of you freelance musicians, you tend to think of class 4 as part of income tax because it's charged in the same way income tax is charged. It comes about at the same point in the year and comes through on your tax return in many ways. Although it's called national insurance, it acts in the same way as income tax does, and you tend to think of it like that. But you cannot claim foreign tax credit relief against class 4 national insurance. So it won't reduce the amount of class 4 you're paying. So just be aware of that. And it has absolutely no relationship with class 2. Oh, sorry, I'm going to go back for a second there because I wanted to talk about the third column here, how to recover overpaid tax. So this is where you need to do a bit of a pros and cons list. If you're talking about a really serious amount of overpaid tax that you paid locally, again, maybe, for example, in the United States where it was charged at 30% withholding tax, and you're not going to get enough credit on your UK tax return because maybe in the UK you only pay tax at 20%, then really filling in a local country tax return is often your best option. But of course, you need to weigh that option up against the cost of finding a local tax preparer and paying them for the work they do in order to get the tax refund, and how much refund are you likely to get from that local country, and so on and so forth. As far as the States is concerned, I will just make the comment that there is a requirement on you as a UK taxpayer, and being within the system of self-assessment here in the UK, there's a requirement for you to minimize the amount of American US tax that you pay. So in other words, even though you've paid an appropriate amount of tax overall on that job in the States, you are expected to minimize that as far as your UK tax liability is concerned. In other words, to put it in simple terms, HMRC want the cash amount of that tax. Even though you might have paid the right amount between the IRS in the US and HMRC in the UK, they want the actual cash. So they will quite often want you to file an American tax return, get the US tax back from the IRS, and then obviously that reduces the amount of foreign tax credit relief you can claim on your UK return. It means that HMRC gets more hard cash in terms of your tax payment. I hope that makes sense. I might come back and do a little more of a deep dive into that specifically at some point, but for now, that's just a general principle to be aware of. So let's just take a very quick example to try and put all of this in context, because obviously I know it's quite techy. So here on the orange side of the screen, I'm looking at a €1,000 job that you did in Germany, and we're looking at the presumption that you're taking foreign tax credit relief. I've labelled it unilateral relief, but in actual fact, it's credit relief is what we're talking about here on this orange box. So you've lost in Germany, 15% withholding tax, and then another 15.5% solidarity tax on that withholding tax. It means that you get, using an HMRC exchange rate, do try to use that, you're going to get a net payment into your bank of €841.75. So now, what that means is when you come to do your UK tax return, you'll declare the original €1,000 that you were contracted to earn as your fee. And then on your foreign pages, you'll put down the fact that you actually had a deduction of €158.25. In other words, that's the 15.825% that I referenced. So it will reduce your UK tax bill by whatever the sterling pound equivalent is of €158.25. So that's the way it works with credit relief. Then if we look at the other side of the screen, the way it would work if you chose to just apply deduction relief, which we see pretty commonly, often it's the easiest way to do it. And if your affairs are very straightforward, or maybe you're doing your own tax return and you don't want to get it wrong, this is often the way we see musicians dealing with things. So that same €1,000 job starting point in Germany, same amount of withholding tax, the net payment into the bank for you was the same €841.75. But in actual fact, instead of going back and on your UK tax return declaring that as €1,000 of income and taking the credit relief, you just declare 841.75 UK equivalent, whatever that might be, using the HMRC exchange rate. That's what you put down as your income on your UK tax return. If that's the way you want to go, then what you are actually doing when you do that is applying deduction relief. So we've covered some of these already, but just to reiterate briefly, keep in mind it's quite high in the States. It's 30%. So you'll either want to file a local US tax return to mitigate that and bring it down, or you may be in a situation where that is not practical for you, in which case, if you're a 20% taxpayer in the UK, you're just going to lose the extra 10% above and beyond our standard income tax rate, basic tax rate of 20%. If you're a 40% taxpayer in the UK, then of course you're going to get the full benefit of the 30% you paid in the States. So just keep in mind, but obviously if you're a higher earner and we're talking significant amounts of withholding tax in the States, then HMRC are really going to expect you to do something to mitigate that. So we've talked about that point 2. And as I said, point 3, that's really going back to this idea that you can only ever claim a credit for what the equivalent amount of tax you would have paid on that same source of income if you had done that job in the UK. And that's kind of what you look at. What would you pay if you did this job in the UK? How much income tax would you pay in the UK on that? Right, that is the maximum that you can apply as a foreign tax credit against that piece of income. And if it's lower because the withholding tax amount was lower, then obviously you can only claim what was actually physically deducted from your job. So it's the lower of those two options. So we've covered this. Short answer here is file a local tax return, but do weigh it up against the cost of paying for that local tax return. The way in which it's reported is you need to complete the foreign tax pages of your UK self-assessment return. That's where you put this detail down for the foreign tax credit relief. And we've just repeated there some of the details that you need to know when you're completing that section of your UK tax return. And as I said at the very beginning, there is a separate full video on how to do this, how to apply for a certificate of residency. That's what that acronym is. But just to put it in context with the rest of this video, the reason that you would want to do that is because you would want to let your overseas promoter know that they can minimize the amount of withholding tax they're going to charge you, because there's a reciprocal double tax agreement between their country and yours, the UK. And if that's the case, you will need to go through the process of filling in this certificate of residence form. They might be happy to accept a generic HMRC one, or they might have their own local country one that they want you to complete. So that can vary from situation to situation. They will need the details of the type of income it will be. Very much in the context of this video, we're talking about business profits, and there will be an article in the double tax agreement relating to business profits. And they'll want to know, as part of this certificate of residence form, that you're the beneficial owner In other words, you're the person who's entitled to that fee. You did the job, it's your money. Okay, so I think that wraps it up for a sort of overview, introduction to how withholding tax works for freelance musicians. If you need any more help, this is who we are, my tax advisor, and we really like to specialize in supporting and helping musicians in particular. I was a musician in a former life, so that's where that comes into play. And thanks very much for joining us, and I'm going to leave you with a very short video, just sort of